Let's start off with events on the forex side. We're seeing the naira coming in at 153 naira 90 kobo to the dollar. Lots of activities, you say, at the CBN window.
Yes, interbank, the naira has lost a bit of strength against the dollar. That's in the interbank market, what we call autonomous. And then at the official window, it's been a very interesting week for the naira. Early on in the week, the first auction, we had the highest ever demand we've seen in 2011, $592 million. Of that amount, 400 was sold, so we had an overhang of close to 200 million. Today again, we had a pretty high demand of close to 500, and what we're seeing now is the third highest devaluation of the currency in 2011. So the currency has lost a lot of ground at the CBN, close to 1 naira in a week, right. And we've seen very strong demand as well.
Now, what do you make of all the interventions that have been made to try to streamline and align the valuation of the naira on the parallel markets and on the official markets? Is it paying off?
Well, it's having some kind of, we're seeing some kind of payback. If you look at the parallel market, which is outside the banking industry, a huge gap opened towards the end of June. There's been a bit of contraction of that gap with the official markets. Interbank and central bank, there isn't too much difference between the autonomous rate. It's less than 1 naira. And CBN has come up with a couple of policies to help the BDC market. This week, we've seen an increase in the amount they can do. They're doing $100,000 in cash to each BDC. And at the same time, the banks can also do 1 million each to different BDC. So that is helping to improve the situation for them. And then in the interbank and the CBN rates have remained pretty close.
All right, let's talk about a topic that's very, very discussive at the moment, the nationalization of 3 banks that were struggling to recapitalize. Now we're hearing that with the introduction of bridge banks, AMCON's lost a significant proportion of its money invested in some of these institutions. What's going on?
Well, I don't know whether we should call them losses or we should call them costs. In the short term, yes, it has cost AMCON a lot of money to recapitalize them, ensure they have enough liquidity to keep going. But the idea is over the longer term, one of 2 things will happen. They will either return to profits on their own or they will be bought over by third parties, maybe after 2 to 3 year periods, if there's value to be found in them. So if you look at the medium to long term, there should be some benefits. In fact, AMCON might come out ahead, but in the short term, yes, they've incurred some costs.
Okay, those costs, as you so diplomatically put it, have been a total of 39% of shareholder investments in some of these banks. And the question is AMCON going to be constrained in any way in terms of its broader mandate to try to inject liquidity within the fixed income markets in Nigeria and stabilize some of these banks at the same time?
Well, right now, generally, there's a lot of naira liquidity. The bond market is active, the treasury bill market is active, and because there's been a bit of a run on the equities, if you look at the equity market for the first half year, it's down overall. There's been a lot of interest in the fixed income market, so it looks like AMCON will get some support. They're in that market as well. The returns they're offering are pretty good. We're looking at 11%, and because it's sub-national, it's pretty safe. It's a pretty safe investment. You're not going to lose your shirt. So I think AMCON will have the funding it needs, at least for the short to medium term.
Let's talk about this trend you referred to, people moving away from equities, moving into fixed income. We're seeing higher capital flows into the sector. What are investors getting by way of yields and by way of returns, and can this be sustained?
Well, investors are getting for the shorter end of the curve, 91 days, they're getting above 7%. As we move into 182 to 1 year, we're talking about 9%. We move past 1 year, we're looking at double digits. We're looking at between 10 and 12%, depending on which of the maturities you've gone into. If you go into a liquid bond, those are good returns over the period because you'll be able to exit when you want to. For the T-bill markets, when you compare them to what you can get in the Western countries where you're sub 4%, sub 3%, they are better returns, especially when you think that the currency will stay stable. Against the stock market, we've had overall loss this year, 15%, maybe in excess, slightly in excess of 15%, which means you're comparing a guaranteed positive return, 7% into double digits, to something you're not very sure of getting from the equity market. So that's what's been driving investor behavior.
Have the markets responded in any way to the July inflation figures that we saw coming in at 9.4%? I mean, it does really, in many ways, affirm the CBN's policies of raising interest rates and keeping monetary policy tightened. But, you know, with inflationary pressures that we're not sure of going forward, what are we likely to see by way of inflation and its impact on government securities?
Well, it's a bit too soon to tell because those inflation numbers came out just yesterday. So we probably need to watch the market for maybe a couple of days to see what the impact will be. But overall, it's good news. It shows that all the actions, because the central bank, the Monetary Policy Committee, they've taken actions all year to rein in inflation, to rein in liquidity. They've given attractive interest rates. At least it shows that we're moving in the right direction. We're finally seeing some results. We haven't seen single-digit inflation for very many months.